Dan, it's great to see you. I love that you get your own ETF named after you. I mean, what's cooler than that, right? To have an ETF with IVES. You love some of these cloud names in here because you see really exponential growth from 33% to 55% penetration, right, for workload in the cloud and $1 trillion in spending for this area over the next decade. These are some of the numbers you provided us. Making some big bets here?
Look, it speaks to a theme that me and you've talked about really for the last few years in terms of cloud. I mean, we're seeing just a massive acceleration of enterprises moving to the cloud. And of course, there's large cap names we could talk about, Microsoft being our favorite name there. But along with Wedbush and ETFMG, it was really putting an ETF together that really focused on mid-cap global, where I really believe that's going to be a key sort of enabler of this next cloud shift. And that's why I was so excited about this ETF, because in my opinion, just even overall in technology, I mean, you talk about a lot of the large cap names and FANG stocks, but I think in mid-cap cloud, that's really going to be sort of a golden area over the next 2 to 3 years.
And I know you have Microsoft, DocuSign, Nuance, some of these names in the cloud ecosystem that are in here. You know, Dan, I once had a boat named after me, right? It said Nicole on the side, and boy, did I love that boat and getting out on the water. I'm sure that's how you feel about this ETF right now today. How often will you be changing the names within this ETF? And what happens on the day that you don't love this ETF anymore?
Look, I mean, part of it, this has really been over the last, year plus with Wedbush and ETFMG, was really putting together a vehicle that would give investors access to mid-cap cloud, but really global. I mean, 50% of it's international, heavy focus in terms of Asian. This is really something in 20 years of institutional experience, really take some of that and give help to retail, as well as, a lot of what I would say more access to names that sometimes are under the radar. Because I think you still continue to have access to large cap names, but I believe by not having exposure to mid cap, especially the enablers, what I would use the hearts and lungs of cloud, which is what this is aimed at. And I think it really fills a hole that we believe in the market.
Right. I love how you call it SMID cap, because that's a really good group that really, is sort of out of favor. People don't know. They don't even know where to start. So you're providing them a plate with some good food on there, right? International, smallish mid cap type names that have a lot of growth potential. Is this the kind of thing you would invest your kids or your nieces and nephews or your friends? Would you say, hey, toss a few bucks in here, it's worth it? For the next, 10 years?
Yeah, look, I mean, there's something obviously putting my name behind, and of course with Wedbush, ETFMG, I mean, there's something super excited about. And I view it as it's the long-term trend. I think too many times, and obviously me and you talk a lot about Tesla, and we could hit on some other names, but this is really a long-term trend. And we're talking the next decade, $1 trillion of spend in the cloud. And I think you have to have global mid-cap exposure, especially a lot of the infrastructure names that are really facilitating what I view as probably the most transformational trend that I've seen 20 years covering tech.
Yeah, that's good. And before I get to Tesla, because I do want to ask your thoughts on Tesla, you mentioned Microsoft. I know DocuSign and Nuance were some of the other names in there. So what are some of your favorite names in the cloud realm?
Look, I mean, DocuSign overall, not an ETF, but I mean, that's been one of our favorite cloud names. It just speaks to what's happening. And we've seen with a lot of names within the ETF, COVID-19's accelerated cloud storage by 2 to 3 years. So I think DocuSign has been one of our core favorites. Nice Systems, which is in the ETF, that's one where it's the call center trend. More and more call centers moving to cloud. And then you look at a name like Nuance, that's a healthcare cloud play. And of course, the Rock of Gibraltar, Microsoft, that is our favorite large cap cloud name, as I continue to believe that's something over the next 2, 3 years, probably the most transformational cloud story out there.
Rock of Gibraltar. You're so funny, Dan. Tell me about some of the other names. Tesla breaks out to new highs, Apple new highs. Everybody keeps raising their targets. Great companies. Are they too expensive now, or what are you thinking?
I don't believe so. I mean, I believe it's a scarcity of growth names. You look at cloud, which we talk about then, but then you look at 5G, look at smartphone, look at Apple. I mean, 350 million of 950 million iPhone users have not upgraded their phone in 3.5 years. That's massive pent-up demand. Is that going to happen on the first tranche of iPhone 12 or later into 2021? That's the pent-up demand. I continue to think Apple $500 bull case. And then when I look at a name like Tesla, as we talked about, I mean, $2,000 bull case, because you look at these delivery numbers, you look what's happening in China. China's worth $300 to $400 to the story. And you're going to continue to see the skepticism, but they've delivered. And I think it comes down to the scarcity. And we think FANG names overall go up another 20-25% this year.
Oh, wow. So hot on FANG, and you make a great point. People are dying for growth. And these are the things that people are using. So your bull case, Tesla, $2,000. Apple bull case, $500. It doesn't seem crazy, right? It doesn't seem crazy at all. What about a name like Disney? You usually chime in on Disney. They had Hamilton recently. Obviously, Disney Plus had a warm welcome in the beginning. And now during COVID, I don't know, Netflix got a lot of attention during COVID. Tell me more about Disney.
That's a re-rating that's happening on that stock because of streaming. I mean, it just speaks to what's happened. That's an accelerated story. And what you've seen on the Disney side and streaming, I mean, that's something that could add $20, $25 per share of the stock. And I think what you're seeing, it's an arms race. Of course, Netflix top of the heap, but you have Disney, you got Peacock, you have HBO, of course, Apple, which continues to lack content. But this is an arms race, and really what Iger built on the streaming side is really paying off, and you're seeing that, especially in the COVID pandemic.
Mm-hmm. Just quickly, how do you stay so bullish? I mean, on everything. When everybody comes on and gives us all these worrisome outlooks, how do you tell me that FANG's going up, Apple could go up, Tesla could go up, and you've been really right on the mark since we've met?
Yeah, look, I appreciate it, but part of it is that, look, in 20 years covering tech, it's very easy to get caught up in some of the near term, whether it could be negative or economic headwinds. I just continue to view, going back to March and the COVID playbook, it's a scarcity of growth names. And in this market, if you believe 2021 numbers are in the general area code, tech stocks continue to move higher. And ultimately, it's one where valuations, you're seeing a lot of these stocks get re-rated. And I think it really comes down to it's a haves and a have-nots. And that's why I think in tech, I still think we're in the 6th, 7th inning of this re-rating story.